Hey guys, it's time for the 30th episode of the Quintuple M, the Monday Mr. Money Mustache Motivation. Today's episode comes from June 2nd, 2011. Insurance attacks on people who are bad at math. As always, I will link to this blog post in the description box below. That way you can go read the whole thing and see all the comments on it too if you'd like. I recently read a Facebook conversation about health insurance where one person said, I'm better off saving the $1,000 a month in premiums and paying for my own medical bills if they ever come up. And the other person said, bah, that's a recipe for bankruptcy. You need full insurance. Which person is right? Years earlier, I was talking to a friend who had just bought her husband a Rolex watch as an anniversary present. As part of buying the watch, she also bought an insurance policy which would buy them a new Rolex if it was ever stolen. Was this policy a good idea too? What about collision insurance on your car and life insurance? Insurance of all types, car, house, jewelry, health, life, is a crazy field swayed by lots of marketing, fear, and doubt. In fact, I bet most insurance is bought partly on fear and without doing any actual math on whether it's a good deal. If you're an average consumer, you spend several $1,000s per year on insurance. Maybe there's a way we can cut that down and let you keep some money for yourself. The first thing to understand about insurance companies is that they are making money off of you, lots of it. They do this by employing a team of brilliant mathematicians called actuaries who analyze detailed mountains of statistics about the average behavior of people like you, and thus how much money they expect to pay out to you in claims. Then they strategically set your premiums to a level where on average they can pay your claims, pay their employees, and still make a large profit for their shareholders. So they have, of course, rigged the odds against you. So when buying insurance, you will most likely pay in more than you get out of it. This seems obvious, but some people still need a little reminder because I keep hearing things like, I need dental insurance so I don't have to pay the $300 every time I take my kid to the dentist. That's a mindset that is imagining that insurance actually saves you money on average, which it does not. Otherwise, the insurance companies would all lose money, which they do not. Once you understand this, you realize there are only 3 possible reasons to get insurance in any particular area. 1, you're forced to do it. Car insurance laws, house insurance required by your mortgage bank. 2, you can't afford the consequences. A burned down house or a year in the intensive care unit at $20,000 per day. Or 3, you are riskier than the insurance company thinks you are. You engage in drunken car racing or competitive eating events on the weekends. Or on a more serious note, if you are planning or expecting a baby or have any known upcoming or chronic health conditions. These are good times to plan in advance and set yourself up with a much lower deductible plan. The U.S. is an unusually expensive place to have a baby in a hospital, and even I wouldn't advise risking paying for this out of your own pocket. The cost will range from $3,000 to $1 million plus, depending on complications you cannot predict in advance. That covers the main categories of insurance, but what about things that you can't afford but are really unlikely? Do you get kidnapping insurance on yourself to cover up to a $3 million ransom? Identity theft insurance? Insurance on your kids? Extended warranties from Best Buy on your new laptop? Stop, it's all a trick. Luckily, there is a solution. Get almost none of it, especially if you already have a healthy stash of savings built up and could thus afford any unexpected expenses. Since you'll be driving only affordable used cars with no bank loans, get only liability insurance. Since you will be keeping yourself healthy for life, get only a catastrophic type of health plan where you pay all your own bills unless the cost exceeds $5,000 to $10,000 in a given year. Since you will be building up savings and cutting your living expenses and you are very unlikely to die in the next few years, you may not need any form of life insurance. My wife and I have never carried life insurance on ourselves and we consider it a compliment to each other. Quote, I believe you would do just fine if I wasn't around because you're a capable and independent person, end quote. Get the highest deductible on your house insurance that the mortgage company will allow, or if you have no mortgage, the highest you are comfortable forking over after an incredibly unlikely event. I usually set mine at about $10,000. Then for the insurance lines that you're keeping, do a nice afternoon of shopping around. I did this last January and sliced about $300 per year off of my remaining home and car insurance. The winners for me ended up being subsidiaries of Geico, although different people will find their results vary with different insurance companies, strangely enough. Then we put all of the savings from these premiums into growing your nest egg, realizing that you are now getting paid to be your own insurance company. It sounds risky if you let the fear creep in, but it should actually feel deeply satisfying and safe. By not buying into a product where the odds are stacked against you, you are statistically likely to win. We can't predict the future, but we do have one tool that lets us turn the unknown to our advantage, and that is statistics. They are my best friend when it comes to becoming wealthy, and they should be yours too. The savings of thousands per year will add up alongside all your other newfound riches from frugality, and you'll soon find that none of these potential expenses will scare you. Over the past 10 years, I've saved about $40,000 in insurance premiums compared to the average level of spending, and now that $40,000 is sitting alongside my other employees, producing $2,800 of passive income each year, and already more than big enough to cover replacing a crash car or paying any possible deductibles on medical bills. And after 10 years of relatively exciting living, I haven't even had to dip into it once. Now I see why insurance companies make so much money. So yeah, I can completely see how this blog post might be a little bit controversial for some, because people have strong opinions on insurance. And, as always, this blog post is obviously Mr. Money Mustache's opinion. But it's worth pointing out that health insurance is something that is a huge topic and a huge sort of unknown for people who are in the fire community, because no one really knows how health insurance is going to look 10 years from now, 5 years from now, even 1 year from now, y'all. And a lot of people don't know what they're going to do post-fire when they're not working anymore. A lot of people like me, have health insurance through their employer, so when you decide not to work anymore, then what are you gonna do? My plan as of right now is to go on my husband's insurance. He obviously is not in the fire community. He's not interested in retiring early, so if he continues to work, then I will just budget for whatever the difference is going to be for me going on to his insurance plan. That way I can be covered post early retirement. At least that's the plan for right now. If we ever have a single payer type healthcare system, then that would be an option. I know a lot of people post fire go into some sort of health share type situation. I think Liberty Health Share is the biggest one, but I get the main point that Mr. Money Mustache is trying to make here, and really, when it comes to your own insurance decisions, you should be thinking the same thing. You don't need insurance if you can afford to cover the cost yourself for whatever it is that happens. Obviously, if you're financially independent, then you've got quite a lot of wealth built up and stashed somewhere. So life insurance may not technically be necessary if the amount that you are leaving is enough to maintain your family's lifestyle, is enough to pay for your funeral. Then yeah, maybe life insurance isn't something that you have to have. I mentioned recently in my May or April budget wrap up that I don't have pet insurance. And I thought about it heavily before I got Rollo, our Irish Wolfhound. Irish Wolfhounds actually are kind of known for health problems and being one of the more expensive breeds to have. But on the other side of that, I just took into consideration the cost of pet care around here. And around here in rural Western North Carolina, it's fairly cheap to own a pet. We just recently had that vacation at the beach. We were gone for a week, and we had Rollo boarded for a week, and he was neutered. He had medications after his neuter, you know, the e-collar and all of that stuff. Everything for the entire week cost me $381 even. That could have been $1,000 in other places around the country. And if you're in one of those high cost of living areas where pet care is super expensive, and maybe you're still on a debt-free journey and still trying to get out of debt and stop living paycheck to paycheck, then maybe pet insurance might be advantageous for you. So insurance really is a deeply personal decision, and only you can decide if whatever it is right for you. For me, I know I'm going to have to keep a close eye on what is going on with health insurance and make sure that when I get closer to actually retiring early, that I know for sure what I'm going to do when it comes to health insurance, because y'all know I do have chronic health conditions. I have hypothyroidism. I have to make sure that the thyroid medicine that I take is a good dose and doesn't need changing, so that requires regular laboratory work. And also, having had this weight loss surgery that I had 6 years ago in June, yeah, I have to maintain labs as far as that weight loss surgery goes to make sure that all of my vitamin levels and my iron levels are okay. Also, in the past year, if you haven't been following my channel, because of that weight loss surgery and the malabsorption that I had to have iron infusions, because even though I supplement iron by mouth, I don't absorb it anymore. So my iron finally got low enough that I had to have iron infusions. So yes, I'm a little bit different than the average person, a little bit higher maintenance when it comes to health issues. So health insurance is not something that I can choose to go without from now on. There actually was a period of a few years in my 20s where I did go without it. And thankfully, nothing major happened. But you can't always guarantee that. So yeah, let me know down below. What do you think about this blog post? Do you agree with Mr. Money Mustache that most insurance really is not required? Would you ever consider going without life insurance? Do you have pet insurance? Let me know down below. I'd love to hear from y'all. And if you haven't already, then give this video a like, and I would appreciate it if you would subscribe and stick around. I do these Mr. Money Mustache posts every single Monday. So I'll see y'all next week for episode 31 of the Quintuple M. Thanks for watching. Bye.